Pete, welcome back to another COVID production. We're here in remote environments once again, talking markets, talking trading signals, and talking what's happening coming into a new week. But before we kick off the new, Pete, how are you? Are you well? And what did you see over the weekend that gave you pause for thought?
Well, good morning, Will, and it's nice to be here on a Monday morning in Sydney. We are in lockdown, as we know. Construction even told to take a 2-week break. So that really shows or demonstrates the impact that it's having domestically to our economy in New South Wales, certainly across Sydney anyway, that basin. Overall, the weather's not too bad, Will. It was a fairly nice weekend, considering, it is the middle of winter, 16 degrees, still cool outside, but, certainly not in the single-digit range, and was reasonably dry. So there wasn't, large amounts of rain as we've experienced. So that's a good thing. Caught my eye OPEC a number of hours ago, what their thoughts were as far as boosting production. And the next part, of course, I normally would be there as those meetings in Vienna. It's a different experience than what winter in Sydney is. It's lovely being, summer in Vienna, I've got to tell you. And you get a bit of an indication what's going on over there. So, yeah, they're increasing production. Oil's come under a bit of a hit to the downside, and I think a further sell-off, maybe strip another $1 or $2 out of the price.
It's an interesting oil's something that we talk about a little bit, Pete, on our regular catch up. And if we look at the OPEC, just digging into that for a minute, so oil is declining after OPEC agrees to boost production.
Yeah, exactly.
So what does that really mean? That's an extra 400,000 barrels a day each month from August, I think is the detail on that.
Yes.
And I think, as we saw, and certainly potentially can see, if we look at any of the graphs on oil, there's an immediate move to the red, isn't there?
Well, exactly. It's stripped a couple of bucks out. It's down about 50 or 60 cents in the last 2 hours, Will. So that's giving you a further indication as far as sell-off. The 400,000, it appeases all of the big players, and that's per month. So it gives Saudi Arabia, it's UAE, naturally, Iraq, Kuwait, Russia, higher baselines. And as far as their production, it'll be measured from May 22, their output cuts, so they're higher baselines. So that's a positive. There was much angst over the last week or two between the UAE and its brothers in Saudi, and now they've piecemealed a deal together. So I wouldn't be surprised to strip another $1 or $2 out of oil prices. They're relatively high considering we've got, in a lot of ways, inflation. We'll discuss that a little bit later in our chat, but certainly inflation's galloping away, and oil prices are a real indication as far as, what impact it has to domestic and international economies.
Pete, ripping quickly around the market as we look at Bloomberg from time to time. Politics, South Korea's sort of looking at the Tokyo Games, and I think Tokyo Games is certainly on the minds of many as athletes depart their countries of origin and head in that direction. We've got stocks extending the drip. We've got yields to talk about. Crypto is something that's worthwhile having a quick look at. Certainly in recent times, we've seen several sovereign countries pick up the idea that perhaps a blockchain base with a Bitcoin overlay could be an additional foreign currency play. I'm referencing one of the El Salvadorian government's attempt to basically lower the cost of transferring cash from the United States home to those on the home web. We've got Singapore's dollar haven. There's an appeal there rising in the region, which has really been ravaged by COVID. And look, for a bit of fun, and who would have expected the Israelis to drop a bit of spyware on a phone?
Yeah, who would have?
As we read a trade or look for a signal, I think there's certainly plenty around. But Pete, ripping right in, what do we think? Why is the Fed so relaxed? And look, let's talk a little bit about some of the supply disruptions.
Well, first off, I think why they're relaxed, Will, is because, the taper, there's talk that the first part of it, of course, is we could have our first cab off the rank being next month being New Zealand as far as rate rises. 88% of analysts are believing that you're going to see a rate rise next month for New Zealand. So as we're moving forward, you're going to see a number of economies, there'll be a divergence certainly, but a number of economies start to look at raising rates. Australia's pushed it out, just for our domestic viewers, out till still 2024. That's what we've been told, and let's see if that stays the story. I wouldn't be surprised if Kiwis are off in August of 21. That's a long time between drinks till January 24, Will. There's every chance you could see the Kiwi dollar worth more than the Australian dollar. There's not a great degree of difference between it. New Zealand dollar is currently at 70, and you've got the Aussie under 74 cents. So just take that on board. As far as inflation, the states taper talks, what Yellen's prepared to do, and all of those, I think, conversations, they'll become more front and center over the next few months in the impact of inflation to the consumer, naturally with high oil prices and wage growth. I just heard something, inflation. I was just listening to a podcast. Inflation's around about 5.5%. If I can recite the numbers that I heard only an hour ago while I was walking, 5.5%, yet net wage drop is around 1.6%, I think, in the States. So you're looking at about a 6.5 to 7%. Well, that's in the sense of buying power versus this time last year, Will. So that's a big number. And energy prices have certainly ratcheted up tremendously in that time. So is food, but they're all, you've got to transport it and it costs fuel to do it. So that's probably the realization there.
So if we look at that and we sort of say, okay, in the context of this CPI, if you like, looking at trucks, cars, airline, airfares. I mean, look, there's no movement in Australia, so hard to kind of talk about airlines in any particular context. Cars, well, everyone's slowing that down too, right? We're at home now for the foreseeable future.
Yes.
And so it's a very interesting move. I mean, property driving in New Zealand and the New Zealand dollar stepping up above the Aussie. I mean, has that happened before in history?
I can't remember, Will. I don't believe so. I stand to be corrected, but not that I can put my mind back to. And what's going to be interesting also is the cross rates as far as the Kiwi versus Swiss franc, Kiwi versus euro, Kiwi versus yen. So I think there's the carry trade, of course, that the Japanese or anyone borrowing with a cheaper currency will be flooding for a return in the value of that Kiwi dollar. So by buying more Kiwi dollars, that will force the Kiwi dollar higher still. So that you can just see how it all play out, and I think it'll be very interesting from an economic standpoint. And then does the Kiwis, do they ratchet up again by the end of the year or early in 22? The jury's out. I'm very conscious how much they've had a price appreciation across New Zealand real estate, and whether this puts a handbrake on that growth.
But the inflation trade, one to watch. Markets and the Fed inflation, again on inflation, we've just covered this off with a bit of detail, but momentum trades, will it fade, trade, inflate or cool?
Well, that's a hard one, Will, depending upon the asset class. If you're looking at equities, are they fully priced? Are we going to see continued growth to the upside? If they look at stripping the taper, taking that off the table in the States, again, the uncertainty with that, with my response to your question is what happens as far as lockdowns? You're still seeing big numbers starting to reappear across the US and across UK and certainly across Asia. So, how long does this COVID-19 pandemic run for? That's the unknown. It's easy to have, economic forecasts and talk about this and talk about that, but the truth of the matter is we've never sailed in this direction before. It's uncharted, and we've got to be very conscious as far as those big moves that can change policy, and that'll happen very much across what our central bank will do and across global policy and what central bankers are prepared to do from the ECB, the Fed, and many other first world nations.
Pete, so the question, when people are sort of sitting back at home asking really is, are we acting strategically or tactically? Do we and do we tactically view the market today, or are we still trying to apply a strategy?
Well, I think depends on the time horizon, what you want to trade and how long you're trading for. If you're trading FX markets, then most traders don't marry a trade, and they're conscious as far as those movements of markets and what happens with something like the yen or the US dollar or our Aussie dollar or certainly the euro. So there's that part of it. The second part is, is it a fear of missing out, Will? That the market has moved so quickly to the upside, the US equities and even our equities, that when is there a point in time that it just all of a sudden has a big handbrake and says, no, we're not moving any further. We're fully priced and we're just going to sit down here. We're exhausted to the upside. And that's always a trader's dilemma. And it's sector specific, but everything has had such a big move. One's got to ask oneself, how long does does the music keep on being played, Will, on the deck chairs?
They're a good question. They're good questions, Pete. As we take a look at the ECB and the Fed, the graph seems to suggest that there's a little drift in opposite directions.
Yeah, very much so, and that's the issue that's going to play. And I made reference to that earlier as far as the Kiwi dollar against the euro and Swiss franc and so on. But it'll be the same as far as there's no talk at all in the sense of eurozone raising interest rates, nor the Japanese, nor the Swiss. So if that differential US starts to take the taper off the table, then it thinks about, right, we might have a rate rise, then I'm sure that that's only going to add more horsepower to the value of the US dollar, and it'll make it stronger, not weaker. So that's always, to a trader's mindset, what are those big, news items that are going to sway a market or move a market? And that's where they've got to be very much across not only the technical side, but certainly the fundamentals. And
now, if you were looking forward, Pete, and you were sort of saying, okay, what news items, what news headlines am I looking for? Which are going to give me my trading signal? What are you looking for?
I'm looking for inflation. I keep on putting that, because the only way, truly, an economic theorist would say, well, the way to contain inflation would be to raise interest rates. Wouldn't be to loosen monetary policy. It'd be to actually increase rates. So that's a handbrake for the for inflation. The other side, of course, is PMIs, unemployment numbers, a host of other economic data points that are released over that month, non-farm payrolls, of course, and then you start really digging deep into, projected growth, what's happening in the next quarter, what are the central bankers saying. So there's I think the point as far as what's happening domestically and internationally across a large amount of, the G7 or G10 bankers going, well, wow, what are you guys experiencing? And then wrap all of that around COVID. It's a very difficult time to be a banker.
Very different time to be a banker, a trader, and in any type of business, Pete. Now, looking at the UK economy.
Well, there you are. There you are. You're working at your office in the city by yourself. Normally, you've got a big team of people with you, and here you are today. So, yes, it is very much so.
Pete, there's not much to say about that. It's a hard time, and it doesn't matter where you are. You're doing it differently. UK.
Yes.
UK economy humming along nicely. The Bank of England is turning hawkish despite its last COVID outbreak. Graph says it all.
Well, it does, and I'm keeping an eye on that. I'm also, Boris Johnson's point that I think the 19th of July it was all open floodgates, and it was back on to enjoying that British summer, which is great news. Let's see what happens as far as do we roll back to a COVID lockdown mindset come October, November again. It's a little bit of we're just waiting to see how it all moves. The British pound, it's been volatile. I'm keeping an eye on it. I'm certainly keeping an eye as far as what's going on with the FTSE, the share price across, those UK base. And I think one needs to be conscious as far as, unemployment numbers. There's some of those numbers there. You've still got, look, most new cases today, 54,000. I mean, what do you say in all of that?
It's hard to call. I
It's
mean,
hard
we're
to
back
get a
that
mind
time.
around it.
It's very hard to call. If I'm looking at that chart, Pete, and I think it'd be a very tough call to say that any economy is humming along nicely.
No, well, that's right, Will. That's right, and that's where it's difficult. I mean, sometimes I'm a little bit lost for words, and I'm just going like, how do you decipher all of this for a new trader coming in, a 23-year-old living in Bangladesh or living in Sao Paulo in Brazil, and they're going, wow, well, what does all this information mean? The last couple of years, it's been COVID. It's really a point in time that one needs to reflect on opportunities. And I keep on saying, don't marry a trade. If a trade's going against you, have your stop losses in place and be very conscious as far as what the mood of the market is. And yeah, don't become too aggressive. Be very mindful that these are highly unusual times.
Pete, on this chart here, we've got the AUD following the Australian yields lower.
Yes.
Again, we're talking a bit about, the position that the RBA is taking on and even the concept of a rate hike club here. Is the language that's being used generating charts to describe what's on screen changing, or is this the language that we've seen over the years forever?
Well, remember that we are a proxy. The Australian dollar is a proxy for China. So we've seen, those numbers that we experienced last week, they certainly weren't overwhelming for China. And in turn, the Aussies come under a bit of pressure to the downsides. I'm looking at it now, 73.77, down 1/3% in the last couple of hours. So that's not a glowing sign. You've got that Kiwi dollar sitting at 69.80. I don't know. I'd have to check to see what the US dollar is doing, Will, but that really gives you an indication that that US dollar has been a very, very strong position. It's 92.74. It's closing in on that 93 handle. That US dollar index, how much further has it got as far as upside? So yeah, that's all of those components building again to currency trading and what the opportunities are that present themselves to markets.
It's fair to say that I think if we're sitting here in Australia today, that there wouldn't be too many people suggesting that the economy is going to be strong coming out of this into this second half.
No, you would have to be sector specific. I mean, if you were in healthcare, then maybe it is.
But even in healthcare, I mean, whether you've got your factories locked down, you've got people who can't get to work, you've got a mobility issue, you've got, I just can't see it, irrespective. I mean, unless you're selling food, but even if you're selling food, chances are your warehouses are, operating at, 20% of capacity because your employees can't come to work to drive the outcome. So again, you might be turning it over in the store because you're an essential, but let's face it, your supply chain may be dragging.
Well, that's true. I'd be very interested I was thinking of that. I was up at Woolworths last night and I walked past Harris Farm and up at Randwick, and I thought to myself, as I saw both shops, at around about 6:15 on a Sunday evening, and I thought, wonder how their last week of trade has been. You're in a lockdown compared to this time 2 years ago. And more people, they're not going out to buy a meal or to, enjoy a meal. So are they spending more of their dollars now cooking and eating at home, which could be it might be a bonus for these retailers or these, the large Coles, Woolworths, Harris Farms, IAGs across Australia. That'd be a very interesting point to discuss that. And
very interesting point indeed, Pete. We should have a look at that over the next few weeks. maybe it's a Friday fun day with a little bit of the journeyman played back at you. What are you eating this week? What are you cooking? What are you drinking? Have you
there you
exercised
are.
and have that weekend lifestyle wrapper?
Yeah, I do agree with that, Will. I mean, people, if they can't go out and have a meal, and we're very much a cafe society, people work hard and they just enjoy having a breakfast or a lunch or a dinner somewhere. If you can't go and buy those meals, then and enjoy that, then you cook at home and you go to Woolworths and maybe their turnover has increased. I don't know what the number would be.
Might well be a good trade there, Pete. Hey, look, let's just dig into this for a minute. So there's some PMI business surveys out of Eurozone, the UK, and the US. We've touched on Australia, the RBA meeting, and we certainly spoke about central bankers last week. Touched on rate hike club and so forth. We haven't talked about gold, and there are some players here in gold. There's a price recovery happening. There looks like there's a bit of strength being drawn from perhaps the decline in yields. Do you want to talk about gold for a few minutes and precious metals and some of the raw commodities that are picking back up and perhaps driving or providing a pathway?
Yeah, I mean, when you're thinking of gold, Will, that US dollar got sold off. So the gold price really, I think, cratered about the 29th of last month. And here we are. So that had a low of about 1760. And now we've had a high in recent days up to around about that 1829. We're back around about 18. I'm just looking here on my little 1813. So it's had a big move in the last 3 weeks, gold. Will it continue? Just let's see what happens as far as that US dollar index. If the US dollar continues to climb, then that might put a little bit of a handbrake as far as gold appreciation. But the inflation story is very much front and center. Interest rates are traditionally a negative for gold. So let's see how that rolls. And we've just got to, but again, the fear factor. I from a personal point, I think gold's got more upside than downside, but we'll just have to wait and see. It's been volatile. And again, that's where traders can do very nicely out of it, both going long and short.
And Pete, before we race off, earnings season's kicking into high gear. Household names like Netflix, Intel, Coca-Cola, Johnson & Johnson are all releasing their quarter results. So stock markets should be moving. There'll be plenty of people looking at those big stocks, certainly in the US, and evaluating portfolio positions.
Well, exactly, Will. We're in a start of a new quarter. So, quarter 3 of the calendar year. And the realization is, what are the consumption patterns like? And where are these business models across, a COVID environment? Are they performing well? Something like Netflix, everyone at home, I'm sure that they're doing very, very nicely. Well, they had done over the last year. Whether it's going to continue upside, or do people say, well, look, we're looking at other opportunities.
Pete, there's the time, there's the wrap, and there's plenty to look at. There are certainly signals in the market that don't marry the trade, I think, is the key message. Beware of the uncertainty and do your homework.
Absolutely, Will. That's what it's all about. And thank you again. Hopefully we're out of this lockdown in the next 2 weeks. It'd be nice to be out by the end of the month. We'll just have to wait and see. It's very much a work in progress. So just time will tell.
Take it easy. Find a way to be positive. Get your exercise when you can, and keep an open mind.
I think it's very wise, Will. I don't think we can, exercise, fresh air, keep your eyes up, neck long, back straight, looking at the horizon, taking oxygen in, good nutrition, sleep well. They're all the hallmarks as far as good mental and physical health. And keep up the running, Will.
All right, Pete. Talk to you soon, and we'll circle back for that weekend special.
Look forward to it. Thank you, Will. Bye.